Hello, Darren Gleeson's my name. I'm the CEO and a founder of Tax Fitness. Firstly, before we jump into the software, I just want to talk about the benefits of why AI tax planning is a game changer. The first reason is that it gives access to 250 proven tax strategies. AI scans a vast, legally compliant database to find the best ways to reduce your tax burden. Secondly, custom tailored to your situation. As we know, no one size fits all. AI analyses your real financial data to match strategies to your goals, income and business. Thirdly, more than just numbers, AI is a smarter approach. It takes into account your future ambitions, growth plans and lifestyle needs to maximise benefits. Fourthly, crystal clear reports, automated insights. Receive an easy to read report showing exactly how much you can save, what steps to take and any implementation costs. And finally, the report enables you to stay in control. With full transparency, the client decides which strategies to use and instructs their accountant. How it works, simple and powerful. Your accountant imports your data, AI scans for the best tax saving strategies. Thirdly, a customised report is generated highlighting savings opportunities, and the client chooses their preferred strategies and takes action. Now we move into the exciting part, AI tax planning. The first thing we want to do is set up a client. I've set up a client called AAA Scenario Number 1. We want to set up the group members. I've set up the trust, and in this little example, it's a trust with a $1.8 million turnover, owned by a family trust, been distributing 50% of the profits to mum and dad. The first thing with AI is we want to import the financial data. Ideally, we'll do this by importing through Xero, but we can enter the data manually. We want to do it for the profit and loss and the balance sheet. This client, they've got a property, they've got a business loan, I've entered all that. For the AI to work effectively, we need to go and click on the Aspirations tab, which is goals, and we need to indicate what is of interest to the client. Is the client interested in minimising tax now and in the future? In this case, yes. And then we need to go through the other questions and answer them. In this example, we're saying that the client is interested in protecting their assets from creditors, lawsuits and divorce, so we'll tick yes for that. When we're filling in the aspirations, we don't have to fill in all the tabs or all the questions, but of course, the more information we put into the software, the better the AI is going to do its job and give us a better result. Business type, in this case, it's a plumbing business, so we'll tick plumbing business. We can put in number of employees, all these other stuff that adds to the AI. Okay, we've set up mum and dad as the base case. Mum gets 50% of the distribution from the family trust. In the balance sheet, we want to put in her private assets and liabilities as well. So put in her home mortgage, also the value of her 50% interest in their primary residence. Okay. Then we go to aspirations. Once again, we want to know the client and see what's important to them. So we ask her and she says, I definitely want to save tax, protect my assets, some of this other. And also we go down to here, we can put in her parents' taxable income. We can also put in dependents' year of birth. And as we know that those two bits of information can be useful for a family trust. If the dependents are over 18, income is low, adult children, maybe we can make a distribution to them. We've done the same thing for the husband. We've added the adult children as potential beneficiaries. Last year they never got a distribution, but it could be on the cards this year. Also, we haven't got a bucket company, but we've just added it as a potential member because it may be an option. Okay, we do that quickly. Then the next thing we go is new report. Okay, our AI is over here on the right. As you can see, that if we click on this little eye, the AI will tell us we're missing some vital bits of information. We can still use the AI to select strategies, but it's going to give a better result if we get the profile completeness to 100%. Like if we go down to the adult children, we didn't fill in the balance sheet, their profit loss or tax details or aspirations. But in this case, we're going to proceed anyway. We click AI select strategies. Tells us the AI suggestions may be a bit limited because we haven't put in all the data. You don't need to choose these strategies. They're just recommendations for us to think about. The other thing is AI selected strategy description. We can go in here and it will talk about what strategy it's selected and the reason why. All right, let's look at what it chose for us. It's a business, a plumbing business. Operate as a family trust. Historically, 50% of the profits have been distributed to mum and dad. What strategies did it choose for us? We suggested in aspirations that asset protection was important, so come up with asset protection. Asset protection, fantastic. We put in the aspirations the ages of the adult children, and AI has done its job and it's selected family trust distributions to adult. What else have we got? AI has worked out that maybe a bucket company is a good option, and it is. Also selected superannuation and self-managed super fund. It picked up in the aspirations and the assets that the client's got a superannuation balance, so then it worked out that maybe a self-managed super fund is something worth talking to the client about. Concessional super contributions, a good standard strategy. What else? Salary packaging, private motor vehicles. Okay, that's enough for us at this stage. We could actually add extra ones ourselves, but I think we'll let AI do its job. Prepare the report. The first one is family distributions, trust distributions to adult children. Maybe we give $25,000 each to each adult child because they're at university studying. What happens with that? We do that, we save $17,000 worth of tax. Okay, maybe we do the suggestion. Okay, maybe we distribute 100. Okay, bit of money into super, always a good go-to strategy. Once again, 60,000. Sorry, deduction. Salary packaging, private motor vehicles. Maybe another 10,000. Strategies for asset protection and superannuation. We're not going to put an amount in here because they're going to go through to the back of the report as a recommendation, and we'll talk to the client about it. Next step, we click on, we're preparing the report. Here we go. The report with your logo, your branding. Okay, the most important part of the report probably for the client is section 2, summary. In this example, we can see that if the strategies AI is selected for us and we've customised, we implement, the client will save $72,000 in tax. Not a bad first draft. There's a tax deduction snapshot. There's the tax expense, taxable income. Of course, if we're doing this for a real client, basically we put in a couple of years of historical comparative data to make the report a little bit fancy. There's detail on the tax strategies, bit of a diagram about how a bucket company works for the client. There we go. 5 minutes, we've done our first draft of a tax planning report. The key about AI tax planning, or the benefit, is that basically we can do it in 20, 30, 40% of the time of the manual system. The second thing is we've actually come up with more strategies than the average accountant will come up with, and more valuable strategies that will, if implemented, save the client a lot more in tax. And the thing is, because we're adding more value to the client and coming up with better presentation, a beautiful report, plus better strategies and more options for the client, we can increase our tax planning fees by 50 or 100%.